Hi, I'm Chef Daniel Boulu, and you are watching Taking Stock.
A bigger than expected miss to the downside for the jobs report out of the Bureau of Labor Statistics today. All this to say it paves the way perhaps for market participants eagerly anticipating at long last another short-term interest rate cut by the Fed on September 17th. This morning on Wall Street, stocks reacting as you might expect, and then they started to tumble in the 10 o'clock hour, and that's likely to be the tail of the tape. Welcome to Taking Stock. I'm your host today, JD Durkin. We are live down here on the trading floor of the one, the only, the great New York Stock Exchange, just moments away here from the ringing of the iconic closing bell. Are you all excited for the closing bell? That's what I'm talking about. That's what I need on a Friday for a short trading session. They got enthusiasm. Unfortunately, participants in the major market indexes not quite as enthusiastic here on a Friday, as we are seeing energy and financials leading the way on this sell-off today. The S&P 500 expected to finish down 0.3%. Energy stocks getting absolutely throttled on the day. We'll talk about ExxonMobil coming up in just a bit. On the show today, we got James Demmert of Main Street Research. He's on deck. He'll be joining us in just a second to talk about the jobs report. Jam-packed half hour coming up here on Taking Stock, and it's time now for the iconic closing bell here at the New York Stock Exchange. Team from Free Markets ETF here to do the honors to round out a shortened holiday trading week here on Wall Street. The S&P 500 started this week right around 65.01, so it is going to finish here right about at the flat line, and the broader S&P finishing down 0.3%. The Dow Jones Industrial Average will finish down for the session 0.5%. The New York Stock Exchange Composite finishing down fractionally. And how about the small caps? Don't call it a comeback. Don't call it a rally. Call it maybe some good faith rotation on the day. The small caps finishing up about 0.4%. All right, let's bring in James Demmert. He is the founder and CIO at Main Street Research here. And I got to say, for a venue that historically has some very well-dressed people here on a day-to-day basis, you may take the cake, my friend. How you doing?
Thanks, JD. Good to see you again.
It's great to have you here. I appreciate you taking the time. Let me get your top-line reaction to the jobs reports today and your reaction to the market's reaction to August jobs.
Yeah, really interesting, right? That jobs report, I think it was expected in our view that it was going to be weak. You had some other metrics coming into that print that would look like the labor market was weakening. So it doesn't surprise us. I think it opens the door for Fed cuts for sure next week. The market's reaction, I think, is very interesting. The market sort of came up. We saw that on the news, and then we sold off towards the end of the day. I think that's the market has already priced that cut in. Now we got 2 more cuts priced in for the rest of the year. What will happen here is questionable. You know, the Fed's going to be very data sensitive. I think the market was sort of reacting to that. Is there enough data in the next couple of months for them to cut that 2 more times that's in the futures market?
You know as well as I do, not all interest rate cuts are created equally. You could do it because you're taming inflation down to 2%. You might also cut interest rates because of falling apart of the labor market conditions. Is there one over the other you think the Fed's likely to take more into consideration as we get closer to the September 17th decision?
You know, that's the key issue. The Fed has said we'll forego the inflation problem to keep the labor market up. They've said it a few times over the last few quarters. So I think we have to expect that if the labor market continues to weaken, they're going to continue to cut. Our feeling is, though, that labor market statistic could be a result of migration. It could be a result of AI taking jobs away, because GDP is still at 3%. So they're going to not want to cut too much and create that inflation. So I think investors should expect that one of those 2 cuts expected in October or December might come off the table. That could cause some downside risk for markets.
How are you advising either people you talk to or investors? What do you think they should keep in mind if they're looking to hedge, they're trying to mitigate risk? in an ongoing environment where I think uncertainty can still be used to describe the word of the day.
Yeah, there's a lot more cash out there than should be. You've got some sentiment for investors that are a little bit on the risk side. We think investors here, if you're not fully invested to your allocation, you should buy dips. We might get that if the Fed doesn't cut that second time. So you want to be fully invested. You want to be very sector specific. This market likes AI, telecommunications, banks, biggest bull market in banks in a long time in this whole electric grid issue. Those are great sectors. Be sector specific. I think you should use stop losses to mitigate those catastrophic declines that can happen in one stock or a sector or maybe even the whole market.
Yeah, what do you look for as we enter kind of on-go here for September? Historically, not the strongest part of the year for equities. Would it be your expectation we kind of have that repeat performance despite the ongoing bull market, or are we dealing in a bit of an anomalous circumstance giving tariff pressure, uncertainty, and an uncertain map moving forward?
Well, it's still early in the bull market, and the AI revolution's real, and it's early in that. But that doesn't mean we're not going to get a normal 8 to 10% correction. I think that would startle investors. I think we could maybe see that late September, October, if Fed cuts don't look likely. Investors are kind of, looking forward to that.
Yeah, I'm about out of time with you, but talk to me about the link between the psychology of an investor and the actual investing of an investor. What should people keep in mind? It is very much a mind game, isn't it?
It is, JD, and the human brain's terrible at this. We tend to buy too high, sell too low, and I think the statistics this year is a good example. Investors have way more cash than they should. They're way more worried than they should be, and the market just keeps going up in their face. And that's a sign that the market's still early. There's still opportunity. We're going to get to a point when it's reversed, and that's when you want to make sure you don't let your psychology get taken away. You get too much risk going on in the late end of the market.
James Demeter is the founder and the CIO of Main Street Research, the best dressed man at the New York Stock Exchange today. Thank you for being here. It's good to have you.
Good to see you.
Enjoy your weekend. I'm going to hand you that. Howie, you and I are going to go for a walk, and to do so, pardon me, gentlemen, we're going to squeeze right by you. If you all don't mind, Howie, we're going to continue on walking, talk about a few very prominent NYSE notable companies on the day. You just got to get through the minefield of people here at the close. We're going to start with a look at one technology name. Craig, have a good weekend, bud. See you Monday. We're going to take a look here at shares of Oracle, first and foremost here. As you can see here, Howie, up on the screen, up about 4.3%, a growing partnership with OpenAI. This company is set to report its quarterly earnings next week. Still below its 50-day moving average after a tough few trading sessions on Wall Street, but that stock is still up 36% year to date. Pete Ash, what's going on? Welcome to the show. Howie, we'll head over this way. We'll take a look at shares at XOM, another NYSE favorite. ExxonMobil shares, unfortunately not the strongest session it's had on the street this week, down 2.8%, kind of part of that broader energy sector sell-off we talked about at the beginning of the broadcast. The average one-year price target on ExxonMobil sits at $123 a share. Analysts see upside potential of another 11 or 12%. Last week, I sat down with actor, producer, and entrepreneur, the one and only Adrian Grenier. Check out now the second half of our conversation. Adrian, whether we're talking about the more traditional old school stock market or some of the exciting investment vehicles in the world of crypto, there oftentimes is a lot of hype, a lot of shiny things to go chase. And I wonder how, from where you're personally positioned, how do you go about separating signal from the noise? How do you know what those long-term investments are to at least continue to learn about and sort of put some of the noise or the shiny things off to the side?
Yeah, I think it's the rule of reality. The shinier and brighter the object, often the quicker it burns out. And depth and meaning really comes from the things that are a little bit more challenging and hard. I know in the movie business, when raising money for films, there's a lot of people that want to write big checks, but they always become the headaches. They become like the pain in the butts. So I always look for smart money. I look for calm and measured money, like people who are thinking of, all of the different possibilities that could go wrong so that you can actually make a long-term healthy investment, not just a get-rich-quick scheme. So anything that seems too good to be true, it probably is. Take your time.
Patience is a great lesson for all investors to learn, so I really appreciate that. Can you tell me a bit about the right token change and what that means in terms of how audiences are able to engage with you in the show?
Well, I mean, if I understand the question, Bitcoin is tried and true. Suddenly it's been legitimized across the world, and I think that that's a great way to start. Of course, there's Ethereum is doing really well right now, and just start with a little bit and start in Bitcoin and then branch out from there.
Are there similarities between acting and investing, between the worlds of show business and Hollywood on the one hand, and becoming a smarter and a more educated investor that you've recognized over your careers in both?
Absolutely. As a creative person, I tell stories through the film medium, but if you look at money itself is a storytelling medium. I mean, what kind of stories across the world and throughout time are you telling by where you put your money and what that money creates in the world? When you invest in a business and that business becomes a thing, you're actually telling the story of civilization in some ways. So I see it as a creative impulse and one that I get excited about.
Before I let you go, Adrian, I wonder, is there any lesson with regards to money in general? Can be in investment, things you've learned about the markets, alternative investment considerations, anything you wish you had learned a little bit earlier or sooner in your acting career?
I would say money is a tool. It's not a goal. It's a tool to use, and the spirit of the tool is determined by the hand of the user. So it's what you do with it and how you do with it. You can use the tool to break things, or you can use the tool to build things. And I would suggest doing the latter.
Hollywood is without a doubt increasingly embracing blockchain technology more and more. It's a fascinating conversation at a really important time. And Adrian, we are really grateful for your time to be here. Congratulations on all the success. Best of luck with the show, and really grateful for your time. Thanks a lot.
Cheers.
We're so back. This is Taking Stock, still live here on the trading floor of the New York Stock Exchange. Time now for the latest in the world of fintech, crypto, and AI. We are seeing Ethereum move up fractionally on the day to about 43.33. Bitcoin, meanwhile, also up fractionally at about 111.5. Next up, the SEC and CFTC are planning a joint roundtable on the 29th of this month to discuss defining and streamlining rules for DeFi, perpetuals, and 24/7 markets. And finally, at this hour, in a move to cut down reliance on NVIDIA and other major suppliers, OpenAI plans to launch its first in-house AI chip next year through a partnership with Broadcom, according to reporting from the Financial Times. All right, let's bring in Todd Stankiewicz. He is the portfolio manager for Free Market ETF. My man, welcome to the show.
Hey, thanks for having me.
It is great to have you. I'll hold that for you.
Okay.
And you just got done ringing the closing bell. Let's start there. What was that experience like for you?
No, that was fantastic. Just wonderful to be here and ring the closing bell for our ETF FMKT, the Free Markets ETF. So it was really an honor to be part of this. And not too long ago, we were actually down for New York Stock Exchange, Texas, ringing the closing bell down there as well.
Yeah, that was absolutely awesome.
Yeah, it was fantastic. Some great events and great thing to be part of. And I think really a great theme. And I think New York Stock Exchange was really a great place to list this. But ultimately, I think what's really interesting is how we're seeing the themes around this ETF play out in deregulation, which I think is really interesting as it relates to crypto and AI and things you're involved in.
For sure. So let's start with an introduction there, because we have a very ETF-savvy audience, but I don't come across many ETFs tied specifically to the theme of deregulation. What should people know if they're hearing about it for the first time?
Yeah, actually, it's pretty interesting because we are the first ETF out there that's focusing on deregulation as a theme. And so that's why I think it's pretty unique. And I think it's really built to build upon this news cycle, this wave of deregulation that we're seeing within the industry. And it feels like almost every week we're seeing a lot of executive orders and legislation come out that's rolling back regulation within the industry. A lot of that focus has been on sectors that people like to talk about, the banking, but more and more we've seen that focused on cryptocurrencies, we've seen that focused on stablecoin, AI, and then all the infrastructure that goes around that. So we're really focused on how we harness those companies that have the financial resilience to capitalize on that deregulation.
Some of the top holdings in the ETF include Uranium Energy, Nexstar Media, GE Vernova, among many others. Talk to me about what constitutes inclusion for one of the holdings into the ETF.
Yeah, so the inclusion in the ETF is very multi-layered. What we're really looking for first and foremost is companies that have the financial resilience to be included in that. So basically it's great if you're a company that's going to benefit from deregulation, but if you don't have the money to reinvest and capitalize on those margin expansions of that deregulation, right, doesn't really matter. So we're looking for companies that have the financial resilience to do it, and then we're actually leveraging AI and AI research tools to then link policy, right, legislative policy, executive executive order policy back to companies that are in a position to benefit from that. So you mentioned a couple names that are out there, uranium, which is linked to a bunch of executive orders that came out trying to fast track some uranium projects from May. GE Vernova is really built around AI infrastructure and how we get power these data centers in AI. And then Nexstar, I think, is really one that throws a lot of people for a curveball, because we had that since the fund went live on June 10th, and that's communication services. And a lot of people look at us like, why do you have communication services in a deregulation fund? And it really flies under the radar. And back just on August 7th, I want to say, the FCC ruled out about 95 or 96 outdated regulations in communication services and broadcast TV. And literally the next week, you had Nexstar went out and they bought Tenga. And it's expanding their foothold rather significantly within a lot of broadcast stations, and it's going to allow them to potentially increase their margins and their operating margins very significantly. So that's a sector that not a lot of people are talking about.
Yeah, absolutely. Got to leave it there. Todd Stankiewicz is the portfolio manager for Free Market ETF. Ringing the closing bell, my man. Thank you for being here.
I appreciate it.
And congratulations. Folks, don't go anywhere. Much more Taking Stock is coming up after this, including the latest on startups, raises, and rounds, plus an interview with Forge CEO Kelly Rodriques. We'll be back after this. Welcome back to the show. Time now for the latest in the world of startups, raises, and rounds. First up, Honeywell's Quantum has raised $600 million from investors, including NVIDIA, Quanta, and JP Morgan, values the firm at $10 billion. Next up, Garage Beer, backed by NFL stars Jason and Travis Kelce. Hey, there you go. Just hit $200 million valuation after its first funding round led by Durational Capital. And finally, the U.S. Army has awarded startup Turbine One a nearly $100 million contract to put AI directly into the hands of soldiers, helping them identify drones and enemy threats even when communications are jammed. Time now for our next interview. Kelly Rodriques is the CEO at Forge, and I am very happy to say the man himself joins us here on the trading floor of the New York Stock Exchange. Thanks a lot for being here.
Great to be here, JD.
Start with an introduction to the work you and your colleagues do at Forge. It's increasingly something more and more known in the financial services space, of course, for the great work you do, but for anyone watching who might be unfamiliar.
Yeah, it's the year of the private market. This is a year where people are trying to invest in companies before they go public. You've got big asset managers that are putting advised clients into private securities. Forge is a marketplace, a platform to buy and sell. and it's also got an asset management which provides really innovative products that are coming out later this year.
So how does that work? People would say, wait a minute, invest in a private company, a pre-IPO company. Talk to me about the mechanics and the technicals of making a platform like that actually work.
So the platform allows today accredited investors to go on, sign up, get accredited, and then buy and sell 200-300 of the hottest companies in the private market. What's coming are some new products for everyday investors. An index fund is coming in Q4 that allow anybody to invest in 60 of the top names.
That's amazing. How do you go about pricing? I took a look at, for instance, SpaceX, right? If there's any company I would love to invest in that doesn't trade publicly, it's SpaceX. You price it at around $230, $250 a share. How do you come up with that number?
So we have a whole team that built Forge Price, which is now featured all over the place. And this allows us to provide an actionable price for the top names. And so what we're seeing is products like the Forge Private Market Index, which is up 55% this year, has got those 60 names in an index format. And we use what you would use in any index, live pricing data. What it got sold yesterday, what's getting sold, or what bids and asks are in place right now. And that data drives predictable pricing.
Much bigger of a conversation happening with tokenization as a tool in creating greater access to the private markets. What does that look like as it continues to roll itself out?
Yeah, really exciting. You're going to see it come to fund products first. So investing in a basket. We're looking at it and talking to all the people that are discussing it. I think it will add less friction on a global basis. So we're probably still a year or two out before it gets really mainstream, but it's coming.
What most excites you and what most worries you about where we are in the general financial markets as it relates to your work currently?
What excites me the most is a convergence of regulatory support and a bunch of investors that run big portfolios in the world saying every American investor should be in the private market. That excites me.
Cool.
What makes me a little bit nervous is the pace with which we can do this at scale. And so we're talking to all the biggest partners in the world to help make that a reality.
Amazing. I love asking people, though it's very difficult to give me a prediction for what the second half of the year, the rest of this year looks like. But if you were to put on your kind of Johnny Carson, Karnak the Magnificent hat, give me some sense on what you think is coming up in the next year or so for your space at the intersection of the markets, and especially the emphasis on these private markets. It's a big one.
Yes. So I think the IPO market will continue to improve. And the better the IPO market improves, the better valuations and liquidity will be in the private market. So as publics become more liquid, more IPOs, the private market will grow faster.
Amazing. Finally, I know this is something you've talked a lot about recently in financial media, soaring AI valuations. What do you make of it, and where do you think we go from here?
So just looking at XAI and Anthropic, both of these companies are up 100 to 200% this year. The growth of these businesses, you've never seen it before. It's incredible. If they continue to grow at 200% organic growth a year, the valuations will continue to rise.
That's amazing. Kelly Rodriques is the CEO of Forge. Very grateful for you being on the show. Folks, we're going to take a quick break, and after that, the latest from Scarlett Sieber at Money 2020. We'll be back after this.
Welcome back to this episode of Back of the Napkin. I am your host, Scarlett Sieber, and I got money on money on money. I got a pen, and I have a guest today in Zach Pettit from Money 2020. Hello, Zachary.
Hi, Scarlett. How are you?
Doing well. So with Back of the Napkin, one of the things that we do is we sit here and we think about someone who's famous, and we do a guesstimation of what their market cap or enterprise value would be here at the beautiful New York Stock Exchange.
Okay.
You understand the risk?
Yeah, it's a nice mix of finance and culture. I appreciate it.
We do the Fin culture.
Yeah, yep.
Fin
And we're going to
culture.
trademark that. Go ahead.
Fin culture up in here. So with that, I'm going to give you a little bit of context because I'm not sure how much you're going to know about this person. So I'm going to
Okay.
give you the person,
Okay.
tell you a little bit about them, and then you have 30 seconds to decide and tell me about what you believe their market cap would be here if they listed at the New York Stock Exchange.
Oh, okay.
If people were companies. Okay?
Okay. All right. I like this.
The person, Hailey Bieber.
Oh, great. You picked someone I know a lot about. Go ahead.
Bieber, formerly known as Hailey Baldwin. She's of the Baldwin family.
No comment.
She is married to the one, the only, Justin Bieber.
This I know about her. Can I have one of those napkins?
Bieber and Sieber, pretty related here, I think, maybe in some distant world. I mean, I'm not Canadian, but I'll take it.
No, you're not.
Okay, so the thing about Hailey is she just sold her beauty company this year for $1 billion.
Okay. That was the
billion.
net sale. Okay.
$1 billion, 600 million in cash money, 200 million in stock, and 200 million in other things I don't remember.
Okay.
So some details about the company. They made over 200 million in sales in the last year from when they sold, and they only have 10 products. They go direct to consumer.
Okay.
So outside of the fact that she's married to Justin, they also have a baby.
Does she still have, so she made some money off the sale, and then does she still have ownership in Alpha?
I'm not sure about that answer, but let's assume that she does.
Okay. Standard, like, post-acquisition equity.
I'd say so. They also went to direct to consumer, and they're starting to do more partnerships with Sephora and the like. She's still the face of the brand.
Okay. Do you know how long that company existed before this?
Only a few years.
Okay. So she still probably owns a good amount. Okay.
Yes. It's very, 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 well, I don't know the exact answer, but we'll figure it out. That's not the
All
point. Okay, 30 seconds. Got a famous husband. She's big family, kids, out here doing the most.
Okay.
All right, 30 seconds and go.
All right. So Hailey Bieber, the one that I read about and stay up at night thinking about all the time, because I know a ton. So the $1 billion sale, let's imagine as founder and, like, you know, taking on a bunch of investments, she probably made a couple $100 million off of that. To be generous, I guess. And then let's say post-acquisition, she maybe holds 10% of Alpha. I would imagine, like 10, maybe it could be a little bit more because she has that, like, actual brand value of hers. Like, if they got rid of her, the value of that company decreases a lot.
Yeah.
So that what's that, like 300-ish million, I would give her a 10 times, yeah. I'm gonna actually,
Spit out your answer.
6 billion. I'm gonna give her a 20 times multiple because she's still,
$1 billion.
right? Did I do that math incorrectly? Because the 10 times multiple would be 6 billion. There's like two things written on there.
Cool
Right?
enough.
Yeah, because that would be 3 billion times two. Yeah, so giving her a $6 billion valuation as a result of, I gotta say, her marrying Justin Bieber was, I'm sure, a wonderful marriage, but also a genius business move. Like, that definitely accrues some value there.
6
So
billion here out of the NYSE.
Yeah.
What's up next? All right.
I feel very I don't feel confident about this at
Well,
all.
good. So if you don't feel confident, do any of you feel confident in his answers, or is he just plain crazy?
Where you at, chat?
Put your comment in the comment because we're out here commenting on comments. Disagree with us as much as you want. Until next time, back over to you, Jay.
Welcome back to the show. There we go. This is Taking Stock in the final moments here of the broadcast live on the trading floor of the New York Stock Exchange. We'll give you a quick preview of what to expect here on Wall Street next week. Earnings on Tuesday from the likes of GameStop as well as Oracle, which we talked about earlier on the show. On Wednesday, wholesale inflation, a look at PPI inflation, incredibly important. On Thursday, earnings from Kroger and Adobe. And then arguably even more important than PPI is CPI. That's going to do it for the show. Monday morning, 9 a.m., Kristen Scholler will be counting you down to the open. That's going to do it. Have a great weekend. We'll see you again Monday. There it is.